Well, despite the broad rally, there are two big industry groups that have fallen and can't seem to get up. Our next guest says that could spell more trouble ahead for consumer stocks. Chart master Carter Worth of Cornerstone Macros over at the Plasma. Hey, Carter.
Hi, guys. Great to see you. Great to be back. Interesting. Yes, cars and homes. I mean, this is a big part of GDP and a big part of the market, and they just don't act well. If you think about it, they weren't performing in line with the market leading up to the swoon. They underperformed during the swoon, and they've bounced less since the bounce post-swoon. I wanted to look at three ETFs and then sort of drill down. I've got auto ETF, cute symbol, cars, 34 stocks. It's everything you could possibly imagine. Home construction, ITB, and then home builders. Now, there's some overlap in these two. So if you net out the double counting, you've got 90 stocks, and the whole thing is worth $1.8 trillion. And what I tried to do here is plot all 90 stocks equal weight as though it were an index, a basket. So first, let's look at the names just to put this in context. These are the leading names that are in the cars ETF, but it's not only Toyota and Daimler, GM, Ford, it's Tesla, it's Nissan, it's Subaru, it's Porsche, it's Ferrari, it's all of them. Now, here, for instance, are the biggest holders in the home construction. You've got Lennar, D.R. Horton, NVR, and down today, Pulte, Toll. Now, the XHB is a broader aggregate, and it's got home builders in it, but it also has things like Home Depot, up only 11 cents today, Lowe's, Johnson Controls, Williams-Sonoma, Whirlpool. So if I were to take all 90 stocks and plot them as a basket, that $1.8 trillion, this is what it looks like. And I think you can draw the lines one way like this, which is that's a fairly well-formed head and shoulders top, and those typically are resolved by lower prices. Now, let's take away the lines, and I want to look at the bounce of late. Now, on trend, and it's come down to trend, and it's sort of bouncing. But here's the issue. The bounce, the sell-off in line with the market, but more than the market, and the bounce, remember, the market has bounced all the way back to here. Now, to put that in optical context, look at the next chart. So here's the same thing. So even as we're going up absolute, albeit barely, look at the relative performance to the S&P. It's making new lows, which means it's not bouncing. The money's not going into this area of the market. It's a problem. Keep going. So here's the chart. Again, I think you can draw the lines like this. And what I'm expecting is that this is the beginning of something not good. And most of these stocks really underperformed badly today. I think it's an area of the market that speaks to rates, among other things. But I do not want to be overweight or even long most of this stuff.